Hello, everyone. My name is Drew Dosek, pro trader here at Verified Investing. And today is a special day for the markets. We're supposed to have news given to us starting at 4 p.m. this afternoon by Donald Trump regarding the tariffs. One thing I'm excited about is clarity. However, one thing we've also learned about this presidency is that today's news could change tomorrow. So you got to stay on your toes, but ultimately volatility is what I'm looking forward to, which gives us trading opportunities, allowing us to capitalize on these movements. Learning technical analysis will help you understand what moves can happen, where the support and resistance lies so that you can make money on these trades. All right, so let's jump into the heat map so we can show everyone what's going on here with the markets. And you see here, over on the left-hand side, what we did today, we gapped down at the open, and then we had a lot of buying pressure, which I thought was a little unusual going into this tariff news. And maybe that could be due to the clarity that should be given this afternoon. Investors love clarity. All right, so Dow Jones up 0.8%, NASDAQ up 0.83%, S&P 500 up 0.88%. U.S. oil had a decent day, up 1%. Gold also continues to rise. And then we have Bitcoin that tested a key level of resistance that I highlighted yesterday, right around 87,000, and has since pulled back from that area. Over on the right-hand side, we see an awful lot of green here on the screen. Some of the bigger players not up that much, though. Microsoft up 0.23%, Meta down, Google down, Nvidia down, Apple's up, Tesla's up. And we're going to get into some reasoning as to why here in just a little bit. But first, let's just jump into the spiders. As you see here on the spiders, this parallel is what I've been highlighting, and for good reason. It's given us awesome insight as to what to anticipate in the markets. If you notice, though, what these parallels do, and I've derived them all off of time. Several people have asked me in these comments, you know, what cycle is Drew talking about? Where is he getting this information? And all of the things that I have learned are based from the principles taught by W.D. Gann. So understanding those core philosophies that he does teach and getting rid of all the coding, because I know oftentimes he didn't speak very clearly or translate messages that were easy to understand. What I've done in my videos and education videos, I've cut out all that nonsense, got straight to the core messaging so that you can understand and make good trades on your own. So back to the S&P 500, here we had a time count develop. I knew that bottom was going to occur. Another time count, knew this was going to be a sell-off. We came down. The benefit of understanding parallels and time frames is that I could anticipate a bounce right here, which did occur. So far today, as I said, we gapped lower and then pushed higher through the day. And look at this awesome close that we're about to have, eclipsing yesterday's high. So today, into the tariff news, I'm eyeing, and it's not much further away, this 572 level for resistance. If we do have some sort of clarity with potentially positive economic news, next area of support that I'm targeting is down here at the bottom end of that parallel. Now, keep in mind, these are near-term targets. This parallel can break. And typically when this parallel is formed, these parallels like to break to the upside. So that we're hanging out now in this lower end is bearish consolidation in general, potentially leading to a break to the downside. If that does occur and confirm, then this trend line, which is in essence the bottom of the parallel, will be resistance coming back up. So just keep that all in mind. A lot of things can happen and change here in the markets. On to Bitcoin. Bitcoin, as I mentioned yesterday, for a move up, we would likely start stalling right here in this area of $87,000. And that's exactly what's happened today. We still could push higher and hit this trend line, but that would be on good economic news. Bitcoin is a risk asset. It's important to understand the S&P 500 does display how much people are willing to risk to go long into positions. And if the S&P 500 is under pressure, it's likely that Bitcoin, also a risk asset, will be under pressure. So following the S&P really gives you clarity to anticipate moves here on Bitcoin. Still looking for, if we do go up, right around $90,000 to find resistance, potentially even this inclining area of the parallel right around 94,000. but I do still see pressure existing on the markets. Maybe in the mid to end of April, we will start hitting the $72,000 area on Bitcoin. Flipping to gold, we do see that we've broken above and somewhat created a pause candle right here with a nice wick on top. So now with this inclining trend line, and we've confirmed above that, this area will be support. So whenever, and notice this is a dynamic trend line, meaning that price of it changes over the course of time since it's inclining. Whenever price comes down to this trend line, that will be the initial support for gold. So watch if there's any curling over, what price action does in this area, especially since it intersects with the upper end of that parallel channel. Into silver, silver hasn't done too much today. We see that it's basically flat from yesterday's fall, which is still okay. This is just chopping around, so not too much to report on silver. U.S. oil, as I mentioned earlier, had a nice day, up about 1%. And we see here too, very similar chart pattern as gold. It's just consolidating right here. If we do have more consolidation, we could move up, but basically we're in the middle of nowhere right here in this wedge. So watch for a move above this trend, this wick right here for oil to be strong. And otherwise we have support if it does come down right around $69.27. Nat gas, it did have a nice day as well, pushing up, but this is all just a little bit of consolidation, bullish consolidation. What could be forming on the chart is an inverse head and shoulders pattern located right here with the right shoulder still not formed yet. We'll see if that forms over the coming days, which will give us insight for a break to the upside being about $4.80. Now into Tesla, there was news reported today that Elon Musk would potentially step down as the leader of DOGE after 130 days in office. Now, after this report was filed, the White House came out and said it was garbage. But anyway, the stock popped on this news because this news would allow Elon to focus more on his companies that he owns, like SpaceX and Tesla. So folks at Tesla and investors in Tesla were very excited about that. We'll see tomorrow if there's any changing news with this story, but it looks like Elon's days leading Doge are numbered. So if we look into the 10-minute chart, you can see right about here, Tesla just popped and it's above this declining trend line. Back to the daily chart. And here, I'll flip over so you can see that. And there we go. All right. So pardon me about that. But you can see here, the price action came up here and was trading right above this declining trend line. That's very bullish for Tesla. So with price action now trading above this trend line, the next area of resistance is going to be this trend line. Now, depending upon the time in which it hits it, maybe at $311 or in the next couple days, right around the $300 mark, that's going to be your next line in the sand for Tesla to beat. Should Tesla continue moving up like this, I anticipate maybe a curl over and then another hit and then another curl over before it breaks through. But if I scroll back on the longer term time frame for Tesla, here are the major buying opportunities. If what I see comes to be true with further selling pressure in the markets, any price under $200 down to this $180, $170 area on the charts will be great accumulation zones for Tesla. Now into rocket companies. This stock we had a day trade with in the morning session today in our live day trading room. And this, I wanted to highlight the importance of understanding Fibonacci retraces and how significant they are to determine levels on the charts. So you see here, I started this Fibonacci retrace down here, concluded with it up here at this pivot, and price action, when it came down, it pierced the 618 retrace and then only closed down there one day, then proceeded to continue to move up. So what does that have to do with today? That just tells the past movement of this chart. But what I use this for is to show you the never-ending cycle of Fibonacci retracements. So if we go to the most recent pivot and we do another Fib retrace, where did price get to today? Also the 618 retrace. Learning and understanding how to interpret moves on the chart is critical to making money. And also it helps you take the emotions out of trading. You find these levels, you understand a rapid move into it will likely lead to resistance. That's what I did. That's what I conveyed to the members today to help them all make money in the live day trading room. It was a great trade in and out while the markets were ripping higher after they're gapping lower. Now here's on to DraftKings. DraftKings had a great day today, up 3.74%. But I want to highlight the fact too of time counts. Again, this takes the emotion out of trading. Look at this move straight down on DraftKings, and it just kissed gap fill over here. Gap fills are great because they give you a specific number to enter a trade. And this particular movement right here on yesterday's price action, price moved right down, missing the gap fill by 1 penny. And whenever a price does something like that, we like to say it kissed the level. In essence, filling that gap fill, even though it missed it by 1 penny. But look at the bounce that occurred because of this move. And I teach all of this inside of my course, Mastering the Overnight Trade, the sleeper hold. This isn't a course only designed for trading overnight. This is a course that's designed to help you understand movements that occur every single day, every week, because much like the Fibonacci retracement, these patterns repeat over and over again. So you don't need to learn a lot of information to be a successful trader. But if you can understand the movements of the markets, you can then start predicting where price action will go and capitalize on those movements. I'm excited to bring you this information because I want you to be successful trading. Now, tomorrow, I'm really excited also to bring you more information about what is going to be conveyed this afternoon regarding the tariffs. We should have some volatility. I anticipate that, and we will be making more money in the live day trading room. And that brings me to a close here. Thank you all for watching Trading the Close. My name again is Drew Dosek at Verified Investing. I look forward to seeing you guys tomorrow. Until then, you guys have a great rest of the day. Thanks so much for watching.